can become bad assets, just like Italian government bonds used to be very safe assets, or Lehman Brothers bonds used to be very safe assets. Now they're very bad assets.
The more radical solution is known as limited purpose banking. It was considered as a kind of blue skies option under Vickers and then discarded. Its designer thinks it's the only way forward.
There's 10,000 separate mutual funds in the U.S. The ones that are 100% equity financed had no trouble during the crisis, because if you don't borrow any money, you can't go broke. And if you have a financial system consisting of a lot of little mutual funds, none of which are leveraged, none of which have borrowed, none of them can fail.
The Kotlikoff plan says simply all regulated banks, investment funds, hedge funds, etc. become mutually owned. So your savings account becomes like an investment and it can be lent out to businesses. But the bank itself can't go to the markets and borrow money.
To the extent that households and firms need to borrow to buy homes or to invest in new products, that's where the real advantage of leverage comes from in economics. It's not to have the financial intermediaries borrow and gamble. We don't need the intermediaries to be leveraged.
Has recognised that. We certainly need, despite the mood, investment banks that are now being derided as casino banks. You need those that can take risk and do risky things. You just don't need them to be big enough to cause enormous problems. And it might well be that you need some sort of state-backed institution, particularly to lend to longer-term projects which are difficult for private entrepreneurs to discount the returns on.
Hold on a minute, we've got the boss of Goldman Sachs saying it might be a good idea if the state owned a bank.
Well, I think if you look around the world, some of the countries that have withstood the crisis the best happen to have those.